Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. Hope you're having a phenomenal day. Taking a quick look here at the crypto market overview. Very quick analysis today, but we're touching on important factors like CME gaps that are forming. Same thing with a quick comparative analysis in these coins, and obviously some back-end dominance data too, and some polls for both crypto Twitter and crypto YouTube. So be sure to stick around. We got an important one here today. Let's take a look. All right, folks, let's go and get started with the obvious here. We're going to start with some back-end data here and just quickly understand how the crypto market looks right now. Fear and greed index kind of hanging out in the 50s. That's perfectly fine. We kind of want to see that. It's going to happen as we continue to range between this 112 to 120K range. But when we look at the alt season index, it's actually super beneficial or excellent in a lot of ways. Now, in other words, it's not to say we can't still pull back, but with us jumping up to that 1.7 trillion crypto market cap for altcoins, that's a very, very good sign. And overall, showing that altcoins are resilient and they bounce back quite quickly when Bitcoin has a good day. So there are obviously some outliers here, some coins you want to kind of avoid, but for the most part, the coins we cover in these analysis, they're all generally the top 100 coins that are going to perform or have been outperforming Bitcoin recently. Taking a look at CME futures, just to kind of touch on some CME gaps here, the ones in red are effectively the ones that are in the red. Basically, they're down for where they closed. So the likelihood of these actually reversing is quite high. In other words, Bitcoin and Ethereum both have a CME gap above the price, the current price, and more likely to get that filled either today, tomorrow, or relative near future. There's definitely no guarantees in this, but it does kind of imply that with us retesting some of our local highs on some of these coins, that we're more likely to go higher than lower. Only outlier we have here is a CME gap for Solana's right there at 200. So it basically implies that that's that key level support or resistance. So we continue to maintain above 200 for Solana, the likelihood of further upside for that. We'll obviously take a look at that and kind of understand more specifically on that chart itself. But when you do a quick comparative analysis on all 5 coins here, we're looking at Bitcoin's all-time high, 123 and some change, or more so 124.5. Obviously, if you count the candlewick. Same thing here as well with ETH too. It came super, super close to its previous all-time high, roughly. I would just say 4,900. That's an easy round number to remember. Solana, this is not its all-time high, but that is its point of control there, that $200 mark. So once more, maintaining above 200 is important. And then SUI and XRP are both kind of laggers. They're not looking so awesome. SUI is actually looking much better than XRP. So my expectation is that XRP is going to continue to range bound until Bitcoin decides to pick a side. If it wants to go up, then XRP will too, and vice versa. Just keep in mind XRP is just extremely well paired with Bitcoin right now. So whatever Bitcoin does, XRP is going to just go ahead and follow along. Kind of like a lost puppy. So let's take a look here. Bitcoin dominance is essentially right there at down in the low 58% range. That's actually awesome. As we can see, money's flowing more so into ETH than it would be Bitcoin. So a lot of money flowing away from Bitcoin going right into ETH, or more specifically, money coming out of stable coins going into ETH and altcoins. So that's a good sign here. Ultimately, just kind of a quick perspective on kind of where we're at here in the overall sense. So that is extremely important to understand, just because back-end data is something that we always try to look at in this channel. All that being said, taking a quick look here at crypto Twitter and crypto YouTube. These are votes so far. Let's go ahead and refresh to see what we got a current here. We can see out of 20 votes, 50% of you think we're going to go sideways this weekend, and roughly 30% are expecting the price to go higher, where only 20% expects it to go lower. You compare that same poll with the crypto YouTube, we can see here that most of you are expecting the price to pull back for Bitcoin. So it's not great, honestly. Really just a comparative analysis there of what the people think. So the simple way to understand it is YouTube is more bearish than crypto Twitter at this point. Again, it's a very small window there. Those are only like 20 or 30 votes total over the last 15 to 30 minutes. So it's nothing super crazy. Either way you look at it, let's go ahead and jump into the charts, the back-end data, kind of see where we're at with basically Bitcoin. I've got some new stuff on the charts here. I just want to discuss with you quickly. First of all, our previous high here, roughly 114,300. We can see that white chart, the white line on the chart here. That's not important. I mean, it is, but it isn't in this chart here, because what this does is kind of shows us the average top traders longs versus shorts. So in the green here, we can see longs are starting to pick up as the days progress here. So that shows a lot more confidence for higher leveraged traders, essentially those who use large margins too. So we can see down here as well, the margin is increasing. So as the price goes higher, the more margin is being added, and we're seeing less shorts essentially. So these are just top traders. These are super high high position sizing, and these are basically just kind of letting us know roughly what their thoughts are. So they are fairly well bullish in this scenario, which makes perfect sense. And just again, to kind of reiterate here, we have essentially bounced off of our previous high as a new low there. So once more, that previous high of 114.7 is the new low for us. And if we look here, this is the volume delta for basically 3 different tiers. This is basically low volume, middle volume, and high volume. So you could basically say this is retail. Retail traders are starting to taper off a little bit. They're still fairly well bullish though. We can see institutional traders kind of starting to buy this last most recent dip. And then of course, same thing here as well with the whales. They're kind of low in interest. Once more, this is just kind of an open interest delta, kind of letting us know roughly what the thoughts are there. And this is once more just the hourly time frame. So if we were to zoom out a little bit further, we can kind of see that the narrative is still the same here. Retail is very bullish. And we are seeing institutional traders are not so bullish. They're just kind of fair to middling. And then definitely low open interest here for the whales. We take a look here at the back end data here too, as well as the liquidation heat map on the left, and on the right, open interest. And this is the last 7 days. I kind of zoomed in a little bit here for us, just to get perspective. We can see 115,000 is that local point of control or open interest range. So over the last 7 days, we've seen the most amount of volume accumulating at 115K. Secondary to that, 112.3 and upwards of about 118 for the top. So we're kind of smack dab in the middle of that range, just kind of building that volume base right at the previous high. That is perfectly sensible. That's kind of how it's supposed to work. Same thing with liquidation long delta. We're at about 6 billion, down from 10. Ultimately, just kind of letting us know we're seeing that natural profit taking over the weekend. 118 upper range of liquidation, 111 lower range. Other than that, the only thing else we want to really note here too is that for our open interest delta, it is still quite high, and these are generally positive when you compare it to a middle percentage here for true retail longs. Now, again, there's a big equation that goes through that. I've been looking at that for quite a while. It may not make a ton of sense from the outside looking in, but I can assure you that's generally a favorable sign. It's showing sustainability in the current price point. Once more, open interest being the indicator there. When open interest is higher, we're generally in good shape. And at this point, once more, retail and institutional traders are more so bullish than the whales. That's kind of the general concept. So, all right, what does that mean for us here? Well, let's take a look at the daily time frame, kind of work our way down, and just kind of touch on the fact that we essentially rejected off of our 20 and our 50-day SMA there. We've got our point of control at 118. So as mentioned previously, 118,000 is that rough estimate of a resistance for Bitcoin. So does it mean we're just going to go straight down from here? No, it simply means we rejected off that local range, and we're essentially consolidating at our previous local highs, which is a good sign. Keep in mind, those are lower time frame indicators, but for the most part here in the daily, we haven't truly broken bullish just yet. So please understand that we're still under some key levels here, and that taking a long does carry a slightly inherently larger risk than it would be taking a short position. But with us having those CME gaps above the price for both Bitcoin and Ethereum, I think we're more likely to see somewhat of a continuation later today or tomorrow, possibly even early next week, just based on the simple fact that CME gaps have not been lasting for too long, at least the last couple of weekends. And for the most part, we've been seeing a lot of rallies more so to the upside Saturday evening and Sunday morning, at least here in the Pacific Standard Time Zone. So that's roughly the concept. And I think at this point, while the daily time frame doesn't and isn't truly bullish, and we are technically below the 50 and the 200-day SMA with our point of control at 116.5. We are still maintaining above 50 in the RSI. We're starting to see our money flow index above the price. When you have more MFI higher than the RSI, it implies that there's more buying pressure. That is kind of it's kind of like a hidden type of indication, so to speak, on the back end. While I don't love hidden indicators and hidden convergences and all that crap that some people kind of attach themselves to, I do think there's a lot to be said here about local highs being retested as new lows. And that's roughly what we're seeing here. That's 114.3K range when the price wicked down to that level here recently. So I'm willing to speculate that 114 and some change is going to be our average average true range, so to speak, for the weekend, and we're probably likely to pivot and bounce from there to fill that fair value gap, and of course, more so that CME gap as well. So those are my thoughts on Bitcoin. What are yours? Why don't you comment below? Let us know. Love to hear it. Obviously, every comment and subscription, whatever you want to call it, all of that stuff adds up to be a very positive thing for the channel. So thank you to those who are fairly new to the channel. We've got actually quite a few hundred new subscribers on recently, so welcome aboard, and appreciate the awesome feedback. So Let's move on to Ethereum and kind of recognize where we're at here. So first of all, let's go ahead and pull up the Ethereum backend liquidation data here and just kind of touch on this. First of all, this is the last 1 month's worth of open interest. We can see 4640 is that heaviest concentration here locally. That was kind of where the price ranged before it took off here. So we got a lot of open interest in that area, basically implying support. Same thing as well with 4700. So I think there's still a distinct possibility we're going to go a little bit higher here for Solana. Correction, sorry, I misspoke. That is Ethereum. And if we do take a look here at liquidation delta, it's still remaining quite high at 25 billion. So you could argue that that's a potential bearish divergence because there's, you stay overextended for too long, you can't maintain these ranges. But with the basically the CME gap being above the price action and the fact that we are still remaining high on liquidation delta, these are usually favorable signs, letting us know that further upside would make more sense. We take a look here. A lot of short holders between 4,900 and 5,200. I'm willing to guess they're going to have a bad day here in the relative near future. Let's take a look here. We do have a pretty sizable fair value gap. So you can't omit completely the $4,300 range as a potential reality for the price action if it were to pull back. We obviously have a lot of support at 4,300. That was the previous resistance here for a couple of days before the price took off. Obviously, the price took off because Bitcoin did well, and Jackson Hole Summit yesterday was favorable. But once more, we're starting to see that little residual, that selling pressure essentially over the weekend. But once more, fair value gap above the price, CME gap, as well as the fact that we're still in pretty good shape here on the daily time frame, leads me to believe we're probably more likely to go higher than lower. It's hard or difficult to want to recommend a long position at this point because once more we do have all-time high territory and just say the $4,900 range. There's a lot of little things here that are kind of adding up to be resistance, but this is, I mean, when you see these kind of patterns here, these kind of patterns do play out typically quite bullishly, right? The pennant patterns, we've seen these break out higher in most cases. So are we just going to go to the metaphorical moon from here? Probably not, but I do think we are going to see another all-time high in the relative near future. It's just really hard to say when that's going to happen. This being a weekend, things are a little funky, so I do generally recommend trading less on the weekends. All that said, though, the 4-hour time frame here still looks quite bullish. As a matter of fact, we talked about this yesterday. I'm glad that we're back under 70 in the RSI. Hypothetically, that's a good consideration to secure profits. And once more, we see the money flow index above the RSI, and we're over our moving average. These are all good signs here to not necessarily consider a short. I don't care if the price drops to $4,300 tomorrow. It's still a low. It's a lower probability and or higher risk when you take a short position on a coin like this right now. Okay, so just keep that in mind. Also, how well it's been behaving versus Bitcoin. I mean, Ethereum bottomed out 12 hours ago, and Bitcoin's still on its way down. So that's generally a very favorable sign if you're considering a trade. In other words, longs are probably a better fit for you if you're going to consider a trade in either direction, at least for this coin here. Moving on to Solana, let's go ahead and double check a couple of things in the back end, see where we're at. Narrative hasn't changed too much here. We've got 196 to 210 is that rough estimate of resistance based on open interest. And then if we take a look at liquidation long delta, it's at about 4 billion, down from 5 billion. That's quite a lot of liquidation for Solana. Typically it ranges in the 2 to 3 billion range. So to me, that leads me to believe that we could continue to see some selling pressure just based on the simple fact that there is not a lot of liquidation above the price left. In other words, not really incentivizing the price to go too much higher. However, we are retesting this range for the third time. Oftentimes, the third time is the charm in a lot of ways in trading. So taking a quick look at the daily, there's nothing bearish about the daily time frame. It's completely bullish, even more so than Ethereum. We look at the 4-hour time frame. There's a lot of confirming factors here with another bullish type of pattern, right? Now, it's never exact. You don't trade patterns alone, but everything is complementing right now, kind of letting us know that further upside makes sense. Only concern I have here is taking along into a key level resistance when we're already overextended going into it. That's usually something I don't like to do. Now, the price continues to kind of work itself up and get like really close and start to squeeze out of that 205 range, that tentative resistance, then I think a breakout would make sense. But statistically, breakout traders are less successful. So I just don't necessarily recommend breaking out or trying to trade a breakout here in this case. You're better off waiting for those back tests that may or may not happen. Right, and that's ultimately what I'm looking for. In fact, there was a couple of back tests that occurred last night when I was sleeping. For one, for SUI, and for two, there was a second one, I think, on another coin. I think it was Chainlink that I was interested in taking, which I may still consider here in a minute. But The concept here remains true. Waiting for these bullish backtests is a better strategy in these scenarios when things are overextended, especially leading into a weekend. So let's look at SUI here, kind of see what's going on. With SUI, there's not too much else really too new. We mentioned that 380 was that local resistance. It rejected off that level pretty well. That's an open interest area of rejection. And in case you didn't know, the price action, when it comes up to an open interest range, it's exit liquidity that happens. So a lot of folks that were underwater on their longs from a few days ago on SUI, they're closing their position at break even, trying to get out of their position. That's usually why you see open interest resistance ranges work as such. Moving on here, though, liquidation delta is at 500 million. That's generally a favorable sign. Obviously, there's more people taking longs than shorts. And if we take a look here at liquidation, there's a significant accumulation of liquidation above the price between now and $4. So it is much more probable the price is going to go higher to try to squeeze out all those short positions versus just going lower. Now, where is the best consideration for entry? It's hard to say, but I do want to identify the fact that we have broken our descending trend, and we're also broken through our horizontal, basically our resistance range of 360. So the bullish backtest I was looking for is a low 360 range, which already happened, but it may actually happen again. That would be fantastic. So in a perfect world, the price continues to taper off to the low 360s. We take a long, and Bitcoin runs back to its fillet CME gap at roughly 117 and some change. So those are things that kind of I try to look into on weekends. You do got to recognize, though, volume's tapering off. Everything's kind of slowing down. I wouldn't expect a tremendous amount, but Asian markets and or early markets on Sunday have proven here in the recent past to be fairly well bullish, especially when CME gaps are available above the price. So that being said, I think we're still in good shape to see further upside. So I'm still interested in a long on SUI in that local range here of roughly 360. To clarify, though, we're above all moving averages. Yes, the point of control at 375 and that 200 SMA is kind of holding the price action down, suppressing it. But as more volume continues to flow in and we start to see this liquidation pile up above the price, market makers love that, and they're going to push the price even higher. So I'm still bullish on SUI to the $4 range. We'll have to reevaluate when we get there because obviously that's a key level resistance for us. Moving on to XRP, you can clarify here, and the easy way to understand it, this hasn't changed. 310, 320, and 330 are those key level resistances. We still have a slightly larger propensity to go higher based on liquidation long delta being high and the amount of liquidation above the price. So I think as we continue to range in this area of $3, the likelihood of further upside makes more sense and a breakout to the upside is higher based on the simple fact that there's a lot more incentive above the price. Keep in mind, though, once more, you can't be greedy and try to take this to $100 or something stupid. I'm sure there's a million and one idiots out there, XRP idiots, that are telling you to take a long right now because of the fact that they have an emotional investment in this coin, and every other Tom, Dick, and Harry online is telling you that you should take a long because they don't know what the hell they're doing. They're literally getting paid because they're promoting XRP, and that's their only the only thing that they know. And truth is they don't know jack crap about it. Anyways, the reason I say all that is because you want to be careful who you trust. Don't trust me for that matter. Continue to vet me if you will, just to make sure you understand kind of where I'm coming from. But there's nothing worse than just an emotional idiot in trading, and most XP traders are that. Sorry, not the traders themselves, the influencers rather. Traders, unfortunately, just listen to the wrong influencers. The whole point we mention this is that XRP, while it could break out, we have a ton of resistance at 310, 320, and 330. Those areas are areas of confluence kind of confirming that we have resistance above us and we're not, even though we have broken through our local range, and yes, we are above our local high here that has been retested as a new low. But I can tell you what, Bitcoin and XRP are performing very similarly in a lot of ways, and the likelihood of XRP breaking out significantly is still fairly low. So that's the whole point of me mentioning that. I'm not trying to throw shade on anyone else that is covering this coin. Just from what I can tell in my community where people post stuff from other influencers is quite pathetic. Regardless of that fact, conversation for another day. I am tentatively bullish on XRP based on incentivizing factors and breaking above key level resistances. The longer we spend above $3, the more likely we are to break towards 310, 320, and 330. Okay. We'll have a conversation on another day on how high this coin could go based on fib levels and extensions, but for right now, we got to get across those barriers first, and we're nowhere near that yet. Okay. Once more, just to kind of reiterate, we're seeing confluence at roughly 310 the most. That's this local high, but also that point of control based on volume, open interest, and liquidation. Okay. They all kind of add up to be the same, tell us the same thing. So once more, you consider a long on this coin. adjust your stop loss higher. Don't be a greedy idiot, and just make sure that you are securing profits whenever possible. We do that in our community often, and it's been a good experience. Quick congrats to our communities here too for some awesome profits on our Bitcoin long, 30%. What is it, ETH, 66%? Those are the kind of the two bigger ones we had here recently. We didn't get too crazy with trades because you never know going into fundamental catalysts like Jackson Hole. That was crazy. All right, folks. Well, thanks again for being an awesome part of my life. Really appreciate you. Don't forget to comment below, like, subscribe, follow. Join us on Twitter, Telegram, and Discord. And also, if you want to become a better trader, cryptocash.tech is a site link down below. Be sure to check us out if you are interested in just being a little bit more consistent. We got an awesome Discord as well. All right, we'll look forward to seeing you in the next one. Have a good rest of your day. Take care.